Module 10, Finance. Section 1, an introduction to business finance. Section overview. In this section, we will introduce you to the main points to consider when it comes to finance within your business. We will look at why it is important to ensure you have a knowledge of all of the key elements we will be discussing throughout this module. Introduction to finance. Finance in business is quite simply the management of money through the entire company and the process of sourcing funds, and then everything that's encapsulated within those two areas. So business finance is a broad term that does cover the activities relating but not limiting to loans, credit, cash flow, forecasting, profit and loss analysis, and payments, bank payments, payroll. So everything that is related to money. So the incoming of money and income, and the outgoing and expenditure of money, everything related to those areas is going to be covered by business finance. And it's important that you as a business owner start to develop a knowledge of the different areas and the key areas to consider under that umbrella of business finance. There's lots of different things that you need to be aware of, and getting to grips with your numbers early on is very much a fundamental part to ensuring the long-term success of your business, especially when it comes to looking at scaling your business and growing in the correct way. You need to know your numbers before you're able to grow in a controlled way that aligns with your business plan and your business strategy. So the key areas that we'll be looking at: number one, bookkeeping. Bookkeeping in its simplest form is essentially the logging or the recording of financial transactions throughout the company. So if a payment is made, this is covered by the term bookkeeping. If a purchase is made, or if an invoice has been paid for, this is all governed by bookkeeping. And the two key considerations that go into bookkeeping are your sales ledger, so the recording of sales and income into your company, and then your purchase ledger, so the invoices that your company receives for you to be able to pay for. So essentially the recording and the collection of information around money coming into the business and money going out of the business. Next key area is financial statements. Financial statements are key financial documents that we look at so that we can gauge how well our business is performing in relation to how we expect it to be performing. There's three main financial statements that we'll be looking at and teaching you how to read and looking through. Number one is your cash flow forecast. So this is going to give you an idea of the cash that you can expect to come into your business and the cash that's going to be going out of your business, to give you a liquid perspective of where you're sitting in terms of money at any given point, so that you can predict in the future if you're going to have any pinch points or struggles when it comes to cash flow within your organization, which is different to profit and loss. You can be a profitable company with negative cash flow, and that's an area that we'll be looking at when we get to the financial statements section of this module. The other key statements are your income statements. So this looks at your profit and your loss and your income as a business. And the final one is something called a balance sheet. A balance sheet is a snapshot of a point in time of where your business is, considering all of its short-term and long-term assets and liabilities, and then any equity that's owned by the company and the owners within the company. And it's a snapshot essentially of how much money as a whole is within your company and how much it's worth on paper. Working with accountants is a huge part of making sure that we are doing everything that we need to do. Finance, and particularly the tax element of finance, and making sure that you're conforming with filing all of the correct accounts in the correct places, is an important part of making sure that you're keeping up with regulations in your business. So working with an accountant is an excellent way of achieving this, but an accountant also does a lot more and can be that financial control and can be an outsourced third-party stakeholder that is able to provide you with an insight in a number of different ways into your own business, but it's important that they're managed correctly and they're instructed in a way that's going to ensure you're provided with the correct information within your company, so that you can make informed decisions about where you are and where you're planning on going. Your management accounts is something that small to medium-sized companies often overlook at an early stage, but your management accounts generally again is a snapshot of your performance of a business over a certain period of time, and it's usually a small period of time, and you want to consistently look at these and review these to make sure that you're on track to achieving your goals. Management accounts are essentially a mini profit and loss to show you how well you performed over a certain period of time. The typical period of times that you would look at management accounts are monthly, so every month, and then particularly if you run a seasonal business, you'll look at these quarterly as well. So how well each quarter of the year performed, and you'll refer your information and your projections back to your management accounts, which is how you actually did perform. Debtors management is a key part of our businesses in the trade and the construction industry, because often we'll be lending credit in some form or another to our customers, and that might be that we'll give them a week to pay. That's a form of lending them credit. Even if we're not providing them with any type of finance facility and any payment terms over extended periods of time, we need to make sure that we are collecting the cash that's owed to us correctly, and that process is managed as efficiently as possible, because ultimately cash is king in business. We need to make sure that our profit is going to align with our cash flow. Again, if we're a profitable company but we're not efficiently collecting our cash, we can create pinch points for ourselves, which means that we've got a successful company, but because we're not collecting the cash fast enough, it can cause us issues. So debtors management is a key part of making sure that we're performing as efficiently as we can. And then finally, funding. So if we need an injection of cash into our business to get us to the next level, what are the considerations around that? Where are we able to find the funding, and how can we approach it in a means that we're going to be successful in landing investment from somebody that wants to invest into our company? So when it comes to business finance as a whole, we have some really key points that we need to consider. And this comes down to the fundamental success of your business. And number one is that you need to know your numbers, and you need to know your numbers fast. If you're in a position where you're taking on work and you're actively looking to grow, if you don't know your numbers, you must change this immediately. You need to be all over the numbers within your business. You need to identify the metrics. You need to identify the KPIs. You need to understand your profits. You need to understand your costs so that you know that you're growing in the correct way. Knowing your numbers in business is incredibly important, and this isn't something that you must wait on until you're a larger company or corporation or organization. This is down to the smallest company and even sole traders that are individuals currently but planning to grow. You need to know your numbers. This is an immediate thing that you must do, and get control over your finance, because ultimately we're in business because we're looking to make that bottom line profit. If we don't know our numbers, it's going to be impossible for us to make sure that the bottom line profit is what we're expecting it to be. Number two, a key point here is that financial control is not an area that you should be saving on. So when you're looking at creating a business and scaling your business, it's easy to assume that you don't need to invest any money at this stage in controlling your finances, or having the best accountant, or making sure that you have good practices in place. This is one of the first things that you must do in business. You don't want to scale a business that ultimately has no control, because you're setting yourself up for a bad situation where you're going to have to try and rein in and control a much larger operation. Where if you put the good practices in early and you spend the money and invest in the control and the people in your organization to control the finance for you, you're going to find that it's much easier to scale your business, because you're creating a good and solid foundation around the financial control. A good business plan centered around a good model and a good strategy is going to be fundamental to ensuring the success of your business. But if there's no financial control, at the back end, i.e. you're overspending in certain areas, or your debtors management isn't quite what it needs to be, and your cash flow is more negative than it should be, and you have no information around your finance or numbers, then it doesn't matter how good your business plan and model and strategy is, you're not going to be able to implement and follow through and execute on what that plan is unless you've got the control in place. So this is something that you need to make sure that you are putting into place very, very early on. And then the third point is cash is king. There's a famous line that says, turnover is vanity, profit is sanity, but cash is king. You've probably heard it. And this is a very, very important thing to consider. And when we're talking about cash, we're really talking about the flow of cash throughout the organization. We're not so concerned at this point with profit and loss, because one of your first aims and objectives in business should be to achieve a break-even point within your business so that you know you're not losing money over an extended period of time. Where businesses tend to fail is not necessarily in a loss-making position, because lots of companies do not necessarily make money in the first few months when they're setting their business up. They're actually operating at a loss, but their cash flow is allowing them to grow the business correctly. And where most businesses find that they fail, and in fact, a lot of recent studies are showing that around 80% of small businesses that do fail are failing because of a collapse in their cash flow. It's not to do with their profitability or their loss as a company, it's to do with the cash either not coming into their business or not being planned correctly when we're attempting to scale. So cash is king. Turnover is vanity, profit is sanity, but cash is king. So then to recap on what we're going to be looking at and understanding from a business finance perspective here is that number one, financial control is extremely important within your business. This is the control of money coming in to our organization and the money that's going out of our organization. The second element of finance is the source of funding. So if you need an injection of cash, where are you going to get that from and how are you going to find it? And then number three, understanding that cash and cash flow within our organization is king. Ensuring the success of our business comes down to making sure that we have a good understanding that our cash flow is positive and it's where it needs to be in order for us to be able to scale and grow our company.